Good afternoon, ladies and gentlemen. I'm Akash, moderator for the conference call. Welcome to Insolation Energy Limited Q3 and 9-month FY26 earnings conference call. As a reminder, all participants will be in listen-only mode, and there'll be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone telephone. Please note, this conference is recorded. I would now like to hand over the floor to Ms. Priyanshi Patel from Go India Advisors. Thank you, and over to you, ma'am.
Thank you. Good morning, everyone, and welcome to Q3 and 9-month FY26 earnings call of Insolation Energy Limited. We have on the call Mr. Manish Gupta, Chairman and Whole-time Director, Mr. Vikas Jain, Managing Director, and Mr. Ravi Dusar, Chief Financial Officer. We must remind you that the discussion in today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that company may face. I will now request Mr. Gupta to take us through the financial and business update, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining us. It is a pleasure to welcome you to our earnings calls. We value this engagement and look forward to maintaining an ongoing dialogue with the investor community. Insolation Energy Limited, founded in 2017, operates in the renewable energy sector with a strong focus on manufacturing solar PV modules. We are consistently ranked among India's top PV module manufacturers and have built a pan-India brand presence in our brand name INA Solar, supplying high-quality modules across diverse geographics and customer segments. As part of our long-term strategy, we are expanding this year into solar cell, aluminum frame, and in future in solar ingot wafer also, with the vision of becoming one of India's leading integrated clean tech solutions provider. The renewable energy sector is expanding rapidly, and we are aligned with the Government of India's Atmanirbhar Bharat mission by strengthening domestic manufacturing and reducing import dependence, while supportive policies and rooftop solar initiatives continue to drive strong long-term demand. Q3 and 9-month FY26 reflect solid progress for the company, driven by higher dispatches, disciplined cost execution, and improving operating leverage. During the quarter, revenue grew by 77% year-on-year, and EBITDA margin expanded by more than 500 basis points, demonstrating the benefits of scale, operational efficiency, and execution discipline. Looking ahead, the structural growth drivers for solar manufacturing in India remain firmly in place, supported by our capacity expansion, backward integration initiatives, and strong demand visibility. We are confident of sustaining 40 to 45% revenue growth CAGR over the medium terms. Our mission is to become India's leading clean tech solution provider, setting the benchmark in integrated solar manufacturing while delivering technology solutions globally. We are building a fully integrated solar ecosystem spanning cells, modules, aluminum frame, and energy solutions, while expanding into IP projects and sub-EPC and O&M services, and in future energy storage also. This integrated approach will strengthen margins, enhance resilience, and position the company for long-term value creations. With that, I will now request our MD, Mr. Vikas Jain, to share operational and strategic updates.
Good morning, all. Thank you, Manish. During this quarter, we continued to execute steadily across operations while advancing our expansion roadmap. Production for Q3 FY26 stood at 356 MW with the dispatches of 364 MW. Supported by consistent execution and healthy demand from commercial and industrial segment, the newly commissioned line at our INA3 facility were in the ramp-up phase during the quarter. As operations stabilize, we expect production to increase meaningfully over the coming quarters. INA3 is designed to be one of the most automated PV module manufacturing lines in India, enabling higher throughput, superior quality control, and scalable operations. With the addition of latest 1.5 gigawatt line in December, our total installed module capacity stood at 5.5 gigawatt as of 31st December, strengthening our ability to address growing market demand. On the strategic front, our greenfield project at Narmadapuram, Madhya Pradesh, comprising a 4.5 gigawatt TOPCon G12R cell manufacturing facility and an 18,000-ton aluminum extrusion unit, is progressing as planned, with civil works and PV building activities in full swing. This expansion marks a key milestone in our backward integration journey. By building a Make in India value chain, we aim to improve cost competitiveness, support long-term margin sustainability, and enhance resilience towards global supply chain disruptions. On the execution side, Kusum project secured in Rajasthan in last quarter, covering more than 200 sites and aggregating approximately 400 megawatt, have completed all PPAs. This provides strong execution visibility while supporting the gradual build-up of our IPP portfolio. We also continue to maintain strong demand visibility, supported by a healthy order book of approximately 2.1 gigawatt, providing confidence in sustained capacity utilization and growth. Overall, our focus remains on scaling capacity, strengthening integration, and enhancing execution capabilities to support in the next growth phase. With that, I now hand over to Mr. Ravi Dostad, CFO of the company, to discuss the financial highlights.
Thank you, Vikasji. I will briefly walk you through the company's financial performance for the quarter and 9 months period. For 9 months, FY26 revenue stood at 1,352 crores, reflecting a strong 44% YOY growth. This growth was primarily driven by capacity scaling up and expanding distribution footprint. For Q3 of FY26, revenue came in at 575 crores, registering a robust 77% YOY growth, supported by higher volumes across key markets. On profitability, EBITDA for 9 months FY26 stood at 195.5 crores, up 69% YOY, translating into an EBITDA margin of more than 14%, reflecting operating leverage and improved resilience to price volatility. For Q3 of FY26, EBITDA stood at 81.7 crores, increasing 175% YOY, with EBITDA margins over 14%. Margin expanded 506 basis points YOY, supported by scale efficiencies, disciplined cost management, and improved operating leverage. Earning per share for the period remained strong, with EPS at 2.27 for Q3 of FY26 and 5.89 for 9 months FY26, representing growth of 170% and 55% YOY respectively. Overall, our financial performance reflects the benefits of scale, improved operational efficiency, and disciplined execution, while maintaining a strong balance sheet to support future growth. With that, we would now like to open the floor for questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. The first question comes from Disha Bordia from Sapphire Capital. Please go ahead.
Am I audible, sir?
Yes, ma'am.
Yes, thank you so much for this opportunity. So just a couple of questions. So for this quarter, I think our production was around 356 megawatt. Can you tell me this number for H1 FY26?
We'll get back to you on production figures of H1 and Q1 and Q2.
So I think last...
Megawatt.
Sorry?
Quantity-wise. You want quantity-wise, no?
Right. This time it was 356 megawatts.
Yeah. It is Q3 356 megawatts and dispatches are 364 megawatts. For Q1 or H1, we'll get back to you.
So I think we had earlier guided that we're targeting around, I think, 22,000 megawatts of production this year. So are we on track for that?
Yeah. This year, we already informed that our production is started, the next expansion phase is started somewhere after September of this year. So around, if I discuss about the H1 of this year, FY26, we have dispatched around the same 350, 360 megawatt of the solar panel, because till that time we have our only manufacturing facility for INA1 and INA2. INA3 we have started after September, and where in this quarter we are able to dispatch more than 350 megawatt. And however, this whole capacity is started from this month, because we have three phases, the line 1, line 2 and line 3. Line 1 and line 2 already operational. Line 3 partly operational and fully operational within next 15 days. And if we discuss about this year, then we have operational fully complete all three lines, including our INA2 manufacturing facility also. So if we are talking about FY27, then we can easily dispatch the monthly capacity. We will reach up to 300 megawatt of the manufacturing capacity, monthly capacity. Then we are able to dispatch more than 3.5 gigawatts in this calendar year, or you can say next financial year.
Okay, so just if I got this right, I think H1 the volumes were 360 megawatt. H1.
Nearly H1, 360 megawatt.
And what sort of dispatch do we see for this fourth quarter?
Fourth quarter, we are looking good dispatches. Fourth quarter, maybe dispatches is more than 350 megawatt. We are tentative. We have orders. We have everything in line. So let's that all decide, or we can have clear picture till the mid of the March. But we are planning to dispatch nearly 450 to 500 megawatt in this last quarter.
And then from next year onward, you're saying 300 megawatt will be the monthly run rate?
Yes, monthly. Yes, 300 megawatt monthly.
Okay. And in terms of your margins, because next year, I think by end of Q3, we'll have the cells as well. So this year, I think you'd guided for 11% PAT. Are we on track for that?
Hello.
Yeah.
Hello.
Yeah, please.
Yeah. Should I repeat the question, sir?
Yes, please.
Yeah, I think this year you'd guided for 11% PAT, and with cells coming from next year onward, you would mention we'll see around 14% odd PAT levels for the next year. So are we on track for that?
Yes, definitely. When cell is started, that we are hope that cell will be start with in Q3 of FY27, then definitely margin will increase.
But we'll see the major impact coming from FY28 onwards, right? Because Q3 will come. So it'll take some time to stabilize as well.
The impact should be started from Q4 of FY27.
Right.
And the major impact, the major impact in the whole FY28.
Right. So once the cell comes, what sort of incremental margins do you see?
We think that margin should be increment definitely. Let's see what happens at that time when the cell start. Market is also slightly competitive, whatever the BCR or ALCM market right now. But we hope that we will maintain somewhere above 15%.
15%?
Above 15%.
The PAT that you're talking about?
Sorry for interrupting,
Yes.
Disha ma'am. Request you to join the queue for more questions, ma'am.
Sure.
Thank you. The participants, we request you to restrict with 2 questions in the initial round and get back to more questions on the queue. The next question comes from Mr. Bhavesh Shah from Quantamental Alpha Spark Ventures. Please go ahead.
Yes, hi. Actually, am I audible first of all?
Yes,
Yes, sir. Yes, sir. You are audible.
Okay. So my question is again related to the margins only. So this quarter itself, as we mentioned, that we witnessed 500% increase in 500 bps increase in EBITDA margins. First of all, what led it to such a spike? Secondly, as the previous lady was asking, so addition of cells coming into the system should have meaningfully guided your PAT margin guidance higher, but you just mentioned that, from 14 it might go to 15 once the solar comes in. So just want a little bit more clarity on that.
Sir, if you see the full year or 9-month figure, the margins in the EBITDA has been improved by 200 basis points. Last year, in Q3, there are some orders which have relatively less margins are processed, and in Q4, some relatively better margin orders were processed. So you will see a gap of 9 to 14%. But if you see a 9-month figure, our EBITDA has increased from 12.32 to 14.46%. That will give you a true and correct picture.
Yes. So that's what my follow-up question regarding this was. So we should not pencil in sustained large jump in the margins, EBITDA margins, going forward. So what should be the sustained EBITDA margin? Should be 9%? Should be what?
Sir, the sustained EBITDA margins will be in the range of 14.5 to 15%.
14. And this is X of cell, right?
Yes, sir. Yes, this is X of cell, and these will be maintained.
Okay, and with cell, the EBITDA would go by how much? From Q4 FY27.
That is what it was replied in the last question, that in Q4 of 26-27, when cell is on, the EBITDA margins will be grown by another 400 to 500 basis points.
So which means we will be closer to 20% EBITDA.
Yes.
Okay.
Closer to 20%.
Thank you.
And it all depends upon how the markets will pan out. This is what we are envisaging right now. It all depends upon how the markets will pan out.
Okay. Thank you so much.
Thank you.
Thank you so much, sir. The next question comes from Mr. Sabri Hazarika from Emkay Global. Please go ahead.
Yeah, good afternoon. So 2 questions. Firstly, just wanted to know some idea on your overall sales mix in terms of how much percentage is CNI, how much percentage is DCR, if at all, and also your order book, if you are disclosing that.
Sir, right now, the order in the DCR, we have around 10 to 15% of our dispatch for DCR.
Okay.
DCR, and the balance is for, you can say, CNI, IPP, EPC, and our dealer distributor network. And some we are doing OEM for our old customers. For in that we are making solar panel in their brand. We are doing white labeling, but that is very less now.
And so follow up to this question, how is the realizations like in these segments? Any ballpark rate? I don't want the exact number.
Sir, DCR and non-DCR price, no doubt there is a price differences there. The price, whatever the difference is, all due to the cell price. The DCR cell price is available in the Indian market right now. So realization, if we can say the both solar panel, we are either DCR or non-DCR. We are working on our, you can say, the differentiation, or you can say our margins, whatever the manufacturing cost we are having for either for DCR or non-DCR is our same. The difference is only for the price of the solar cell what we get from the Indian solar cell manufacturer. Otherwise, realization is nearly the same for both. Hello?
Okay.
Hello?
Yeah. Yeah.
The average realization depends upon one more thing, what kind of blending we are doing. For example, if we are doing 10% blending, the realization, average realization will be somewhat different, and if we higher the blending, the realization will be different. So it is very difficult to say what is the going forward, what is the average realization.
Got it.
It all depends upon what is the blending of DCR and non-DCR.
Right. Second question is on your cell plant. So you were saying you will commission it in Q3FY27. So how long will it take to stabilize, and based on this capacity 4.5 gigawatt, which is the nameplate capacity, I guess, how long will you take to achieve optimum utilization, and what would be the peak utilization level for this cell plant?
After commissioning, it will take almost 3 months to get the plant to ramp up to its full capacity, and we hope to produce almost 3.8 to 4 gigawatt of cells from this plant. Once the capacity is utilized on full scale.
Okay, fair enough. Thank you so much, and all the best.
Since we are not constructing this plant in phases, this is a single location, single setup of 4.5 gigawatt. So all the production will come into one stretch only.
Right, got it. And this is like these, the aluminum frame as well as this plant, they are at the same facility, right, in Madhya Pradesh?
Yeah, they are at the same location.
Okay. Thank you.
At the same location only, we have kept around 70,000 square meter of land free for further extensions into maybe vapors and ingots.
Okay. Thanks. Yeah. Thanks.
Okay. Thank you.
Thank you so much, sir. The next question comes from Mr. Tarun Agrawal from Tata Investment Limited Corporation. Please go ahead, sir.
Yeah. Hi. Hello. So my question is pertaining to the order book. Currently, as we speak about, we have an order book of 2.2 gigawatt, and the next quarter we will be doing close to 450 to 500 megawatt of orders will be executed. And going down the track for the next year, we will be doing 300 megawatt of orders per month, which you have said earlier in this con call. So can you give brief picture about the order book? Because I guess there is some misalignment in terms of the order execution and the order book built up. So how the order book will come currently, how many orders have we placed, and what is our deal win ratio? So if you can give some picture over there, that would be helpful.
Yeah. So presently our order book stands at 2.1 gigawatt, right? So which will give us a clear visibility of next 6 to 9 months. And this is an order book refilling is a continuous process, because we operate in many market segments. We operate in dealer distribution network, we operate in small EPC, we operate in large EPC. So it is as a function, we cannot create large order book on the same time, because every customer wants immediate dispatch. So it is a process, it is a function. The present order book gives us a visibility of 6 to 9 months.
And also one more thing, what happened in last quarter or last to last quarter, it's a huge rapidly changes in the polysilicon complete prices, from polysilicon to solar cell and all supply chain. The prices are changes so much in last few months, so you cannot possibly to maintain so long a period of the order. So it's a huge problem in this sector right now. So for long order, either we need to keep order without the price of the raw material, only on the tolling basis, or if we need order with the raw material, then it should be either funded by the customer or covered with the any price addition or decrease. So right now it's very difficult anyone to maintain 1 year or 2 year long order book with the fixed price. So we are trying that order book should be fixed price, whatever raw material we are in our control. So up to that extent of the time we are trying to book fixed price order. Otherwise the future order with the adjustable price as per the raw material availability in the China and in India.
Sir, it will help us to keep our margins intact, to increase our margins. The strategy will always help us.
Okay, got it. And one last question from my side. What is the current status about the migration from SME to the main board? Because I guess there was some commentary from the management side that this would be done by the end of Jan, and I guess we are at middle of Feb.
Sir, I will like to inform you that from BSE we have already received letter on 23rd of January for migration letter, and NSE we are waiting that we will get any time in this week. Already everything is done. The final sanction means migration letter we will receive any time in this week. And after receiving migration from NSE, BSE we already received. We will plan to migrate within this month or early of the March first week.
Okay, got it. That's it from my side. Thank you.
Thank you.
Thank you, sir. The next question comes from the line of Mr. Tyagarajan R from Taurus Capital. Please go ahead, sir.
Good afternoon, sir. Thanks for your time for the call. Just a couple of questions, sir. One, you in one of the presentations you spoke about building a 400 megawatt IPP portfolio under the KUSUM project, sir. So what is the thought process in terms of capital allocation for the IPP, right? Is it going to be from a long-term perspective, how much of contribution, capex contribution, do you think the current business is going to fund into the IPP? And what would be the debt equity ratio? Currently, I think it's around close to around 0.2. Are we adequately capitalized for setting up this IPP? And would you be looking at further equity dilution, given that IPP requires its own capex?
So there are multiple questions. So let me give you. You want to ask for the IPP business, right? So I will give you answer in parts. First, you want to understand how we are growing IPP. So let me give you a brief that approximately 400 megawatts of projects we have won through tender, and we are in the process of executing those projects. Coming to debt equity, IPP is having a different set of debt equity ratio as compared to other manufacturing or module or cell manufacturing business. So the debt equity remains the same which other IPP players are having. We are also having the same. We will also going to maintain the same debt equity. Your question number 3 is capital allocation, or how we will fund that our capital, our contribution. So in this year, our cash accruals we are envisaging, or we are thinking that our cash accruals will be close to 220 crores for this current financial year. Next year, if we see a 40-50% growth, and with cell coming in, the cash accruals will be more than 400 crores. So we have enough cash flows, we have enough internal accruals to fund our IPP business from our side. And coming to financial closure of these IPP projects, already 7-8 Indian banks are ready to fund us. They have given us in principle, as and when required, we will get the debt.
And what is the capital allocation for the IPP project, sir?
We'll get back to you on the capital allocation. We'll get back to you.
I appreciate that. Thank you, sir.
Thank you so much, sir. The next question comes from the line of Mr. Mitesh Mehta from Long Term Investment Group. Please go ahead, sir.
Good afternoon, and congratulations for a great set of numbers. I have two questions. First is related to the all noise in overcapacity in solar panels manufacturing. So, how does management plan to grow this business, say by going into exports, or going in now new projects comes with BESS or something like that. So does management have any plan to diversify there also?
Sir, first of all, I would like to tell you that there is a myth in India that there is overcapacity of solar panel manufacturing in our country. Right now, I will tell you, sir, around 142 gigawatt of total cell manufacturing capacity registered in the ALMM. And however, that manufacturing capacity around less than 100, or you can say 100, nearly 100 gigawatt of the capacity registered, which is TOPCon or G12R. You can say what is the latest technology is right now. The balance is all whatever the registered is ALMM, either monoper or poly, the old manufacturing capacity is there. And if we say that our any company who is showing their manufacturing capacity, all companies are working annual maximum, the efficiency of the machines is nearly 70%. Not more than 70% machines are performing at their maximum manufacturing capacity. So effectively 70 to 75 gigawatt of the manufacturing capacity right now we have actually in our country for TOPCon, M10R or G12R manufacturing capacity. Out of that, you can say government is already finalized more than 50 gigawatt is regularly tenders or purchasing by the central or state governments, including all schemes. Other than this, C&I market is there, rooftop market is there, and the upgrowing market, which is expanding very fast. One is the data center, another is the green hydrogen, another is the BESS, which is expanding very fast. Their requirement is regularly increasing in the market. And if we say that government is offering the tender for 50 gigawatt annually, that is 50 gigawatt AC capacity, whatever the government is expecting, opening or offering all tender for that 50 gigawatt AC, we need at least 65 to 70 gigawatt of the DC capacity to fulfill the requirement. So if we say the capacity, whatever we have right now is nearly equal the demand, whatever the demand in India and whatever the capacity available in India, manufacturing capacity. So there is no such of over capacity of solar panel manufacturing in our country right now. And you can see that in each and every manufacturing, solar panel manufacturing company, their quarter to quarter number you can see in all manufacturing company, they have some increase or they have some positive sign with their numbers in each quarter. So capacity wise, I don't think so in next 5 years or in 10 years, there is any, currently there is, or you can say currently there is any excessive capacity of manufacturing in our country.
Okay, and that solves my question. And any plans for exports or diversification to BESS?
Right now there is only, yes sir, right now only one country where we can export from our India, that is US. And whenever now we are start our manufacturing capacity in new facility, then this year we are planning to start quality certification and explore the US market for exporting. And for BESS, we are in right now we are in just in the planning phase. And however the market will move for BESS manufacturing in our country, then definitely as a manufacturer or as a forward or backward integration, if there is any, we think that or we see that if the market is going towards the BESS manufacturing, then we definitely go with manufacturing of BESS.
Okay, and are you into EPC?
Sorry for interrupting, sir. Mitesh, I would request you to get back to the questions, sir. Thank you. The participants are requested to restrict with 2 questions in the initial round and get back to the queue for more questions. The next question comes from Mr. Kapil Advani from Earth Growth Funds. Please go ahead, sir.
Hi, sir. Am I audible?
Yes.
Thank you for taking up the question. Sir, I just have one question on the revenue guidance. So we have mentioned that we will do about 3,300 crores of revenue this year. But as you mentioned on the earlier part of the con call that we will be doing 40 to 45% of CAGR growth. That will comes about 2,000 crores of revenue this year. So in that case, we still miss about 50% from the guidance. Can you shed some light on that?
There are 2 parts in your question. We had already communicated in October and November to our investors that there is a delay due to delay in production capacity, ramping up of production capacity due to monsoon and other factors which are beyond our control. So before September, we have only 1 gigawatt of production capacity. The new capacity addition will come in after September only. So until and unless we don't have capacity addition, we cannot achieve revenue guidance. So this is what we have already communicated with our investors, and the current scenario, what we are envisaging right now is close to 2,000 crores. So there is what we envisage that our plant will be operational in the month of June, July. But due to factors beyond our control, the plant is not operational. So if capacities are not in line, then it is not possible to translate it into revenue.
Okay, sir. Thank you. Thank you. That's all from my end.
Thank you, sir. The next question comes from the line of Mr. Anil Parekh, an individual investor. Please go ahead, sir.
Am I audible?
Yes, sir.
Okay. Thank you for taking my question. This is my first phone call. So wanting to ask the management if they could share some information about what parts that go into currently making a solar panel that are being imported from China, and which of these parts do we intend to replace through either internal manufacturing or sourcing from within the country, and which parts will continue to be imported from China, 3 years out, 5 years out?
Sir, right now there is a different type of cutting raw material which is used for the manufacturing of solar panel. One is solar cell, glass, aluminum frame, EPA, EPA junction boxes, ribbons, and like this item. If we say about the manufacturing, component manufacturing, or you can say raw material manufacturing in India, right now module manufacturing is 100% done in India, and for raw material cell, we are now around 15 to 20 gigawatt cell manufacturing in our country. But in future, I think we have 1:1 cell manufacturing capacity in our country within next 3 years. For glass, right now we have not so much of the manufacturing capacity of glass, but lots of companies are right now coming with the solar glass manufacturing. So I think within next 2 to 3 years, we are also independent for the glass manufacturing in our country. Same, the aluminum frame manufacturing capacities are also expanding in our country. Right now we are purchased from India also, and we are purchased from China and Malaysia also. But I think in future also, within 2-3 years, the aluminum frame also fully manufactured in our country. And then ribbon, there is a copper ribbon which we are using. That also manufacturing capacity expanding. Right now we are also purchasing from India. More than 50% of our requirement we are purchasing from our country. And the same in future, I think this is also manufactured in our country. EPE, also we have lots of manufacturing capacity in our country. So we are morely, you can say we are having enough capacity in our country. But as per customer requirement, we are purchasing from India also, and we are purchasing from China also. For the next major raw material is junction box. Junction box also we have enough capacity in our country right now, but as per the customer demand, because right now the customer is demanding some specific brand names for these raw materials. So as per the customer requirement, we are purchasing from our country and from China also. So you can say if within next 2 to 3 years, I think for solar panel manufacturing, mostly supply chain is manufactured, or we have availability in our country, and the government is also supporting. Right now the central government is very much keen to have all supply chain of solar panel up to polysilicon to make in India. Solar panel already we have ALMM. Solar cell ALCM come from January 26. ALWM, or you can say ALMM part 3 is effective from June 28, where ingot or wafer is also mandatory from Make in India. So this government is very much keen to have all solar panel manufacturing, or you can say this supply chain manufacturing in our country only.
So, sir, do you anticipate that in the next 5 years, India will become completely self-sufficient with respect to solar panel manufacturing, including raw materials, including frames?
Maybe sir, before that. Not 5 years, I think within next 3 years.
Okay. And my last question is about, a lot of conversation in India happening about the power super cycle. I was just wondering if you could talk a little about the power sector, particularly about the power demand from data centers. Do you think they are more likely to use green energy, such as yours, or, more traditional forms of energy? And how big is the U.S. export opportunity that you talked about, with respect to numbers? Any color you could provide, that would really help. Thank you.
I will tell you, sir, just to say the power requirement. You say that our country is still the power deficient country in the world. We are right now a manufacturer. You can say we have generated 486 gigawatt of the power totally in whole. Out of that, around 221 gigawatt from the coal, 123 plus gigawatt from the solar, 80-90 gigawatt from the wind, and the balance from nuclear, hydro, and other things. And India is now the per capita power consumption of our country is 52, means हम दुनिया में 52वें स्थान पे हैं per capita power consumption के मामले में sir. We are below than the Bangladesh, we are below than the Myanmar. Government is very keen to increase the power manufacturing, or you can say power production capacity in our country till 2030. Our target is 500 gigawatt from the renewable sources. Out of that, around 298 gigawatt from the solar, and the balance is from wind, nuclear, hydro, and other sources of nuclear power. And as far as my knowledge, this target is very, you can see very nearly it's going to be changed. I think the government is changing that target from 500 gigawatt to 12 to 1300 gigawatt till 2032 or 2033. So government is also keen to increase the power generation in our country, and in data center, in EV charging, in AI, or you can say in the EV data center and green hydrogen, BESS. These are the 4 sectors which is very fast upcoming sector where the requirement of power is increasing day by day, and we think to achieve that requirement, to fulfill that power requirement, solar is the major sector where we can fulfill our power requirement of our country.
Right. So you mentioned about solar being the major provider for power. Do you see that happening even though, solar has a shelf life and there is substantial maintenance? Yeah, that was my last question.
You can join the question, sir. Dear participants, we are kindly requested to restrict with one question in the initial round and get back to the queue for more questions. The next question comes from the line of Sarang Joglekar from Vimana Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just wanted some color on the cell line capex. So this year, FY27, we'll be spending about 1,000 crore, right? And then the total capex is 1,300 crore. Is that correct?
Your voice is, Karan, your voice is not audible properly. Can you speak some on a louder note?
Yeah, am I audible?
Yeah.
Yeah, so on the cell line, the total capex is 1,300 crore, if I'm not wrong, right?
Yes.
Yeah, and this year, FY27, how much of that would you be spending?
It is, as communicated earlier, it is in FY27, 750 crores. Close to 700 to 750 crores we will be spending.
Understood. Got it. And on the IPP side, what is the progress, and do you expect any revenue from that project in FY27?
See, the plant is commissioned in Q3 now, so we are expecting revenue in Q4.
Oh, okay. So, and how many, the IPP I'm talking about?
You are talking, yeah, please. What's the question? Can you repeat the question, please?
I'm saying IPP, the IPP projects that you're doing 400 megawatt, what's the progress on that? And do you expect any, how much revenue do you expect in FY27?
For IPP, these projects, there is two part. One is for Kusum A part, which we have PPA in December this last to last month, and the second part where PPA is having earlier. So that 14-15 plant we have already commissioned, and they already start power generation, and we have all formality done with the Rajasthan government. And the balance, the Kusum A, which we get around 214 locations, 211 locations. For that we got LOI in the month of December. PPA we got in the month of December. Out of that 211 land locations, we have already finalized lease deed agreement and migration mutation around 100 sites, and the balance sites, the lease deed and mutation is in the process. And for these 100 sites, we have already doing our working, and we will start formally work on the sites or on the ground, maybe within this week or the next week. One by one we are starting, we have finalized all the INC contractors. We have finalized mostly all the suppliers of the structures, transformers, inverters, etc. Solar panel we are supplying from our factory, and banks we are aligned with 2-3 major banks, especially SBI Bank, AU Bank, and Bank of Baroda. We have already aligned for the this project loans. They have already given their in principle approval for these loans, and these all projects we think that we will complete these all projects within the whatever the stipulated timeline from the Rajasthan government. Maybe this timeline should be up to September 26.
Got it. And so full all the 400 megawatts.
Sorry for interrupting, Sarang sir. Sorry for interrupting you. I request you to join the queue for more questions, sir. Thank you, sir. The next question comes from the line of Nirav Upendra, an individual investor. Please go ahead, sir.
Yeah. Hello, everyone. So, the question is, hello, am I audible?
Yes, sir, you are.
Yes.
Yeah. So the question is, we are looking for backward integration like solar cell, solar panel, and then ingot and wafers. So in forward, we are establishing ourselves as an EPC player, and then we are also considering BESS. So I would request for the update on the BESS, and are we considering being a player in green hydrogen or electrolyzer?
No, right now we are not planning any for this green hydrogen. We don't have any plan for green hydrogen. And for BESS also, we are right now we are in the discussion and planning phase. Still we are not finalizing any plant machinery or anything for this BESS. We are just waiting for clear policies from the central government on the BESS, on the import of BESS, or they are putting any like solar panel manufacturing, like ALMM type thing, anything for tender. They are the local Indian tender. They are participating the Make in India BESS, like this type of any policies. So we are waiting for that policy to finalize the plant machinery or any further investment in the BESS.
Okay. And the second question is that since we are establishing an IPP business, so is there any like long-term targets apart from this 400 megawatt that we are looking to build a portfolio of so that we get a sustainable income revenue from it?
Yeah, definitely we are planning. If there is any tenders or there any opportunities upcoming in our Rajasthan state or any other state in the country, then definitely we are going to participate in that tenders.
Okay. Thank you very much.
Thank you so much, sir. The next question comes from the line of Priyanshu Maheshwari from Holani Venture Capital Fund. Please go ahead.
Hello. Good afternoon, everyone. Congratulations, sir, on the great set of numbers. So while going to the financials, despite infusion of 400 crores through the preferential issue last year, the finance costs have been on an incremental trend for the last 2 quarters and overall in the last 9 months. So can you shed some light on what the debt structure of the company, what was the end use of the debt, as well as what was the average cost, weighted average cost of the debt that was raised?
So the finance cost is almost short-term working capital. There is no long-term loans in the books. On a consolidated level, the long-term loans are very, very minuscule. In Insolation Green Energy, the main company where we raised money for setting up a plant, the working capital will be close to 350 crores. So that working capital is for 3 gigawatt capacity. The average price of the the average cost of the finance is 8%. 8%, and since the capacity is multifold, so utilization is multifold, henceforth the finance cost has increased.
Sure. Thank you. Further, can you please shed some light over the capacity utilization of all the 3 units separately? Because since you already mentioned the third unit came in commencement in September or October. So if you can just shed some light over all the 3 total capacity and its utilization.
The capacity utilization, as per normal standards, the capacity which out of total installed capacity, 50 to 55% can be utilized capacity, right? So from unit 1, we have less utilization. Unit 2, we have unit 2 is fully utilized for first 6 months and moderately utilized in Q2. And unit 3 is now more utilized because of the TOPCon facility we have, which has better yield and better demand side. So unit 3 is more utilized as compared to unit 1 and 2.
And what will be the
and going forward, this will be the trend.
Okay, sorry to interrupt you, sir. We would request you to join the queue for more questions, sir.
Sure, no worries.
Thank you so much. The next question comes from the line of Channa Satyanarayana, an individual investor. Please go ahead, sir.
Yeah, good afternoon, sir. Am I audible, sir?
Yes.
Yeah. Sir, some of my questions are already answered. One question is about the envisaged turnover of 8,000 crores and top margin of 10% PAT margin, which was envisaged by the company last year. 2-3 updates were given. When the investors can expect these figures, sir? 8,000 crores top line and 10% PAT margin.
Sorry, can you repeat your question?
Sometime during last year, the company has given updates to the stock exchanges saying that the company envisages 8,000 crores top line and 10% PAT margin.
Yes.
And when the investors can expect these figures, sir, actually?
The vision of $1 billion is still intact. We will going to achieve that vision in next 3 years. You will see our top line will be $1 billion or 8,000 crores. What we have informed to investors will be met, and that is the vision. We are working on it.
That means in which year, sir? In 28, FY 28 can be expected?
Yeah. Either in 27, 28 or 28, 29.
Sure. And the company is having plans to enter into VSS.
Sorry for interrupting you, sir. We would request you to ask one question in the initial round and get back to the queue for more questions, sir.
All right. Okay.
The next question comes from the line of Mr. Hemant Jain, an individual investor. Please go ahead, sir.
Hello. Yeah. Sir, can you speak a little louder?
Hello.
Yes.
Sir, I want to know the capacity utilization for half H1 and quarter 3 of our units.
See, we are on a growth phase. Our first line has been commercialized in the month of September. Second line will be in the month of December. So it is not wise to give you the exact capacity utilization. Once the whole plant, INA 3 unit has been commercialized, then it will be wise to give you the capacity utilization.
Okay. Thank you.
Thank you so much, sir. The next question comes from the line of Mr. Sachin Raj, an individual investor. Please go ahead, sir.
Yeah. Am I audible on that side?
Yes.
Yes, please.
Yes. Yes. So my question is to Chairman, sir. What was the assumptions that has been made when we charted the investment plan? And second question is that out of 100 sales bids that you must be, the INA must be placing in the market, what is the success rate of winning that? Out of 100, whether it is 36, 79, what is that?
Sir, can you repeat, sir, your first question first?
Voice is not louder. Can you speak some?
First question?
Yeah. My first questions to Chairman was, what was the assumption that we made when we decided on this investment and to achieve the target of 8,000 crore? Because since we are saying that we are on track for next 3 years, what was that assumptions? And second question is that.
Sir, first I will reply your first question. The assumption is very clear, sir. We are around 5.5 gigawatt of the solar panel manufacturing, then around 4.5 gigawatt of the cell manufacturing, and the pace the 4.5 gigawatt of the aluminum manufacturing, sir. So if you calculate in after 2 years, or you can say one by one, when after this FY27 Q4, when all manufacturing capacity is ramped up on their full, then FY28, when we are able to apply or able to run our factory on that pace, then each factory is producing their own the manufacturing means target means solar panel manufacturing. We are planning that around 5,000 crore of the top line. The solar cell is nearly 3,000 to 3,500 crore of the top line, and the aluminum is somewhere around 700 to 800 crore of the top line for the next year. Means you can say March 28 or you can say March 27 onward. So we are taking all that assumption to when our all manufacturing capacity is fulfilled and working on their full pace. So this we are able to achieve this $1 billion plus revenue.
Okay, great. And one quick question, sorry to moderator, but out of 100 bids placed in the market, either it is a tender or it is some quotation-based bid, what is our success rate as a INA? Out of 100, how many times we are receiving the order?
Sorry to interrupt, Sachin sir. In the interest of time, I would request you to rejoin the call, sir.
Sir, around 30 to 40% we have our success rate wherever we submit our offer and we are going to the market with our INA brand.
Okay, thank you. Good.
Thank you so much, sir. The next question is a follow-up question from Mr. Tarun Agarwal from Tata Investment Limited Corporation. Sir, I would request you to take one question at a time, sir. Thank you.
Yeah. Hello. So my question pertains to the monoPERC conversion to TOPCon, because I guess the more of the contribution is coming from the TOPCon facility. And if you can just bifurcate the revenue contribution between the TOPCon line and the monoPERC line, and is there any possibility that the monoPERC line would be converted to the TOPCon facility in the near future? And also just add to this question, you have mentioned in your presentation that the wafer line would not be a built-up line, but would more be a taken line from another one. So how this would help in terms of synergy for INA?
Sir, I will answer you one by one. First, you asked that our bifurcation of mono and TOPCon. Okay. So if we say about the H1 or FY26, the major contribution is for mono line in the H1, and in the Q3, it's around, you can say, the 50-50 of the contribution in Q3, and in Q4 definitely the contribution of TOPCon is increasing and monoPERC is decreasing in Q4.
Yes.
And if we see about FY27, then definitely if I can say that more than 80% is TOPCon, and I think less than 20 or maybe later or the end of the 27, maybe monoPERC will stop. So whenever we have requirement in the market for monoPERC or we get the DCR cell from the market, we will be running our this monoPERC facility, because still lots of requirements are coming from the market, or especially from the Pradhan Mantri Surya Yojana for 550 watt of the DCR mono panel. So we are till then, whenever we get the DCR cells and we have our own market, then we will regularly manufacturing the monoPERC. And your second question, whether we can change this monoPERC facility to TOPCon? Yes, we can change this facility from monoPERC to TOPCon, and we have already buying all kits for changing this monoPERC to TOPCon, and we are also in process to ready our civil construction also in our new INA3 unit, where we will transfer in future that this all monoPERC facility convert into TOPCon.
Understood.
Thank you, sir. In the interest of time, that will be the last question for the day. Now I hand over the floor to the management for the closing comments.
So we once again thank you to all our valuable investors for joining this conference call. Thank you once again from Insolation Energy Limited.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation. You may disconnect your lines now. Thank you and have a pleasant day.